And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome, my futures family, to the market forecast for Tuesday, October the 4th. My name's John Hoagland. Thanks for trusting me with your time. As always, our focus is finding accurate context, always thinking risk management first, and staying patient in our trades. If you're already in the markets, hopefully you've got things going your way already. It's an exciting day here at Top Step and hopefully in the markets for everybody. We have a big announcement coming out today. Check your emails sometime after 10 o'clock. We're hoping you're very excited about this new change to the program, and we're looking forward to, of course, as always, your success. This morning, we have several talking Feds. We have a couple of economic indicators. 8 o'clock this morning, Logan and Williams are scheduled to speak. 8:15, Meester scheduled to speak. 9 a.m., factory orders and job opens and labor turnovers comes out. That begins the beginning of a week filled with unemployment or employment information, of course, culminating on Friday with the non-farm payrolls and the unemployment rate, 7:30 on Friday. 10:45, we have another talking Fed speaking. Jefferson is due to speak, and noon, Daly is going to speak. So lots of talking Feds, lots of things to keep an eye on for us today in our trading. Obviously, we can see that we've got a bullish start to the fourth quarter here. The beginning of October has been very friendly for global equity markets, continuing in Europe, continuing to push U.S. stocks even higher on the open today. Markets have kind of lowered their expectation of Fed rate hikes to about 125 basis points by March. That's down from about 165 basis points. So maybe a little bit of good news as far as rates are concerned. We still have plenty of information that we are going to be, of course, using to gauge inflation. We don't see inflation giving up anytime soon here. So this week's focus, again, is going to be on employment and Fed speak. We got a lot of Fed speakers all week. I like to call them talking Feds. Crude prices continue higher on OPEC Plus expectations to cut production during the meeting tomorrow. Apparently that meeting is still on tomorrow. They're looking to cut approximately, at least 1 million barrels a day out of production from OPEC and OPEC Plus. We've got crude inventories rising here in the U.S., however. We've had 5 straight weeks of increasing inventories here in the U.S. We've got the API today at 3:30, and then, of course, the EIA Petroleum Status Report tomorrow at 9:30 for all of you crude traders. VIX is a little bit lower this morning, back down below 30 at 29.22. The dollar index continues its fall off its recent 20-year high. Last week it traded up to 114.78, currently trading 111. And the yield on the 10-year continues to slide a little bit lower this morning. We're currently at 3.6%. As always, I ask that you hit that lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Subscribe to our YouTube channel so you can get notified when we do go live. Speaking of going live, we've got Make Hogue Money today. We've got the Coach's Playbook today. And then, of course, at the end of the day, as always, we have the market recap where we sit back, relax, take a look at what happened in the markets, take a think about what may happen tomorrow, and get ourselves ready to have a nice evening and get some rest for the following trading day. Here is the link, the direct link to register for Make Hogue Money today. We'll always look forward to seeing if we can't put our heads together and find some decent opportunities. Last Thursday, we had a loss, and then we had a nice winner, so we ended up making money last Thursday. Let's see if we can't make money today in Make Hogue Money. All right. Good morning to everybody. We got Caprice 101. Very hot with the hand lately this morning, and every morning you're again first in the room winning the prize. Tachyon. Theo, good morning. Haven't seen you in a while. Theo, hope things are going well for you. Charles, Dan Trader, Jules, Serenity Trader, Joel, MB, howdy to you. Shaw Cunningham, good morning. Rooster Terry King, Ron Merlot from San Diego. That would be kind of funny if you were from San Diego. Ron Malott. Sarah Hall, good morning, prayers and love to you as well. Mohammed, Grim Reaper Trader, good to see you. Good to see you. Rob T, 3 Lions, still no internet in Daytona Beach, so no trading for you, but very grateful to have our health and safety either way. God bless you, 3 Lions inside. I've been continually praying for those that have not been as lucky, and I hope that we all continue to do so. Good morning, my guy, Vince. John Doherty, good to see you as always. Haggle Matters, good morning to Dead Letter Opener, to Dark Kevin. What a good morning. First 2 trades winners, and I noticed I was still on practice account. Yeah, it happens sometimes. Always double check. There's nothing perfect in futures trading and electronic trading for sure. There is no perfect platform. Always double check. Make sure you're in the right account. Always double check. Make sure you're not working any orders if you don't intend to. So important to remember to do those things. Jason, Bill Phillips, Trading Research, Rusty Golfer. Here's Unicus with his quote for the day. Good morning, Unicus. The secret of happiness is to do something else in the meantime. It's so true, right? I mean, if you're trying to be happy, it's probably a lot more difficult than just allowing yourself to be happy. They always say, what is it? Your destiny is what you find on the path that you choose to avoid it. Yeah, good quote again, Unicus. Thank you very much for those again. Captain Price, Kevin, Serenity Trader, and the theme song from the Talking Feds, We're on the Road to Nowhere, right? Or Psycho Killer. Marcelo, good morning. Burning down the house. There you go. JTS Wave, chilling with Dylan, Captain Price, Columbus, good morning. Steve Frischman, good morning. Been to San Diego from boring old Maryland. Well, that's all right. Maryland is a beautiful state. I know you probably get some pretty good seafood there, huh? Brody, Patrick, late again, but good morning. That's all right, Patrick. You're just in time. We're going to move into the charts here very shortly. And Joel MB, patience. Patience. Always important to remember in trading. So, yeah, let's jump into the charts. Patrick is commenting to Unicus. The quotes are always appreciated. Thank you. Unicus, just love those. Just love those. Keep those coming. Always great to see, and we all appreciate them, Unicus. Brooksy, good morning. Let's jump into the charts. Interesting day yesterday. We had the late spike in the equities that really, I think, brought an excellent nuance, an excellent direction for the trading day that seems to be trying to continue today. Let's have a look. So here's the daily in the E-mini S&Ps. We've got an increase in open interest on this move to the upside. So that's telling me it's really not hollow. We're an estimated 22,000 in estimated open interest increase yesterday. On Friday, we had a 30,000 increase in the move to the downside. This is more about new buying coming in than short covering, I believe. I think we probably still have some pretty short inventories off these lows. We were thinking about that yesterday. We had a bit of a P-shaped profile for the better part of the day before we extended the range. We've traded the entire range from last week already. We looked below it in the overnight yesterday, night before last. We've looked above it now in the overnight. Last night. That's our entire range from last week. We've achieved it, in 2 sessions. 37.83 weekly kickoff high. We were looking yesterday at a potential naked point of control being a target for the upside yesterday, which it traded to a T. The next one, naked point of control, is 37.83 quarter, and it is a very prominent one. It comes from the 22nd here, and it's 12 TPOs wide. The wider the TPOs, the wider the point of control, the more magnetic it can be. So I'm really looking forward for a continuation to see if we can get to that naked point of control, which is this week's weekly kickoff high, 37.83. Why is it this week's weekly kickoff high? Because that is a very prominent naked point of control. We are still seeing continued rejection of the late spike from Friday. Here's the TPO charts. Here's our late spike, opening above it, rejecting, continuation, P-shaped profile, short covering, and continuation, new business to the upside. This was the target we were looking at this market coming to, was the naked point of control from the 28th. The next one, all the way up here. Look at how wide this point of control is. The wider the point of control, the more magnetic it will be in the future. So we've already been kind of looking at the market continuing above yesterday. Let's go back to the 30-minute chart so we get a little bit more context here. We have the move to the upside yesterday. We have overnight inventory to the long side. We have gap rules. We have last week's high in play. Last week's high showing some magnetism here. At least the market is holding here. We've got to remember we've got a lot of overnight longs in this market. These overnight longs are weaker hands. They're not holding positions for days. These overnight longs are going to be flat by the end of the session today. So if we don't see continuation to the upside relatively early in the session, there's always the possibility that these overnight longs, this overnight inventory, can offer us better trade location if we are looking for longs. We may get a pullback and then a continuation back to the upside. It's going to be a little bit more complicated today, I believe, than it was yesterday. Yesterday we opened, rejected the late spike. All you really needed to do was look for opportunities to look for longs. That's simple, right? No, usually it's never that simple. But at least we had that reference and that nuance to say we're rejecting lower pricing now. We better start looking for a spot to get long. If we couldn't get long, that's okay. There's always more opportunities. So with this gap overnight inventory, looking for an opportunity to bring price back down, perhaps to this naked point of control that has not been rechecked in regular trading hours. This would be a nice sweet level to look for an opportunity for an execution if given the opportunity. Again, we have to wait and see. Opening range, we are opening out of balance. Opening range may be a trade we might want to look at today in Make Hogue Money. So it's going to be a little bit more complicated, a little bit more vague to really put a nuance that's going to be the ruling reason, the main nuance we're doing something. Yesterday, we had a really good ruling reason. We had a nuance that was stating that we were going to start to look for longs, and today we don't have that ruling reason or that nuance that we're seeking just yet. We are out of balance. We've got overnight inventory to the long side. We've got open interest that increased on this move to the upside. So, these are of course nuances, but is there a ruling reason? Is there a reason why we want to do anything, early in the session other than the fact that we're out of balance? it's going to be a little bit more difficult today. Of course it is, because it's Make Hogue Money Day. Couldn't do it. We couldn't have Make Hogue Money yesterday when I was pretty confident we were going to be looking for longs. Well, we've spanned the entire range from last week. Are we still too short in the hole? Are we too long in short time frame? Will the doctor marry his nurse? It's like trying to watch a soap opera called As the Market Turns. Will the S&Ps continue their upside move, or will they fall? We're going to have to see. We're going to check it out on Make Hogue Money. Let's see what we've got here in crude oil. TJD, Sonny, good to see you. Mike, looking for 3 candle soldiers here in the daily chart. Orion, good morning. Subconscious, good morning. So here's the crude oil continuing its push to the upside. We lost 900 in open interest. Volume was pretty decent yesterday. The loss in open interest is a little bit concerning. It's more of shorts covering than new buying coming in. We may see that come in today. Overall, our structure is still largely intact to the downside. We've got a short time frame move to the upside. We may actually see some sort of a change in market state if we continue this upside move. So lost open interest, short time frame upside brings volume. We had a little bit higher volume yesterday. Not all that impressive. What we do have impressive is the continuation in the gap opening range, looking like it may have been the low of the session. Here it is. So far, opening range is the low of the session. We've got the opening range here, 85.23 to 85.51. So maybe, 28, 30 points of opening range. Not too bad. Opening range, the low of the session. After opening, out of range and out of balance, and a continuation move to the upside. We have a lot of overnight inventory to the long side here that are currently getting paid. We're not worried about them as long as they continue to see price moving higher. So with the gap rules, we're looking for opportunities in the direction of the gaps if we cannot close the gap relatively early. Subjective term, that is, relatively early. So I'm going to be watching that opening range. If the bottom of the opening range falls, that may be just enough to push some of our overnight longs into getting out of some of those. With the fundamental information that we're expecting tomorrow, I don't see that there's any really big risk to the downside here. I'm going to be looking for opportunities to buy pullbacks as long as we don't reaccept inside the range from yesterday, which looks like a pretty tough opportunity for us there. Here's the NASDAQ. So with the NASDAQ, it's the same asset class, but so different from the S&Ps. It's just amazing to me. Yesterday, where we added a whole bunch of open interest to the upside, we lost open interest in the NASDAQ, about 2,000 contracts. Even on Friday's move to the downside, where we added a whole bunch of open interest in the S&Ps, we lost approximately 4,800 in open interest on this push to the downside. So the open interest has been falling the entire time we've been down in this area, which to me is indicative of a lack of acceptance of that area, and we're showing rejection of it now. So we tested the weekly kickoff low and last week's low yesterday. We rejected it. We rejected the late spike, although it was a much more difficult rejection. We have not reached last week's high, where we've already done so in the S&Ps. It looks like we're going to be opening with a gap. Volume was a little bit lower yesterday. It makes sense that the volume was a little bit lower because of the late spike on Friday. There was like 1,300,000 that traded in the last 30 minutes in the S&Ps in the New York Stock Exchange. So there was a big spike in volume on that spike to the downside. That makes sense that there was more volume yesterday, on Friday than yesterday. Although a lot of that volume came in one move. So, and that one move did put in the low, and then Sunday night we put in a new overnight low that occurred in the overnight session. So that makes me a little bit nervous to the long side as well. I think we're still chasing shorts out of this market, and I think that's why we lost open interest yesterday in the NASDAQ. Volume lower. We have not completed last week's range the way we have in the S&Ps. The upside certainly seems to be coming tougher on the NASDAQ than it has in the S&Ps, but the NASDAQ has taken much more on the chin in this whole year. Friday's spike is still showing rejection. Here's the 30-minute chart. So here's the late spike. Here's the move into it and the rejection. Now we see the market continuing. We've got overnight longs. We've got gap rules. We did not get to this naked point of control yesterday where we did in the S&Ps yesterday. It looks like we've reached it in the overnight, but I'm going to look for a touch of that in the regular trading hours session. Here's the TPO chart. Here's our rejection of the late spike. So this is the late spike on Friday. This market opened above the late spike and traded into the late spike where the S&P did not. S&P stopped short here. NASDAQ traded into and rejected the late spike and then continued its move to the upside. P-shaped profile, short covering, losing open interest, and we didn't gain a whole bunch of open interest on this move to the upside. So again, back to the 30-minute chart. What are the nuances? Do we have a ruling reason? Other than the fact that the market is out of balance from yesterday's trade, we have overnight inventory to the long side. We haven't touched last week's high where we're stuck to it in the S&Ps. We did not reach this naked point of control from the 28th until the overnight here. So to find a ruling reason for an opportunity here, it's pretty thin. Other than the fact that we've opened out of range and out of balance, maybe the opening range could provide an opportunity for us. We certainly want to continue to limit risk. Always want to limit risk. Gold. So the volume was okay yesterday. We added about 6,000 in open interest on a breakout day. I'm looking at this as a potential market state changer, at least the first step of one. We have 1, 2, 3 points of contact on this trend line. We have 1, 2, 3, 4, 5 points of contact on this trend line. So we're step one to breaking out of the current downside market state. If we can break out above this trend line, I think that we may be much better off as a market state change. You know, this state has been since April. We've been moving lower, moving lower, moving lower. We could break that. We could break that, and we could do it today. Volume was again okay, adding 6,000 in open interest, seeing some continuation to the upside here. All right. As long as the dollar continues to show some weakness, I don't think we have any risk. Any downside risk here? Of course, we got to watch that dollar, watch the talking feds. Of course, there's all those other things that could change things. And again, I think we could be facing a market state change. I believe that the opening range remains the low of the session in the regular trading hours here in gold. So here we go. No real overnight inventory. Here's where we opened. Here's where we kind of opened here. Maybe a little bit long, but those longs are continuing to get paid. Looking at this as potential resistance because we have 1, 2, 3, 4, 5 points of contact on this short time frame trend line. If we break out above that, then we've got nothing but space above. So the opening range at the low of the session, I'm only looking for longs. If we take out the low of the opening range, that may be enough to scare any of the overnight inventory back to closing the gap or back to settlement. We've got 1,700 this week's weekly kickoff high that was resistance, may become support if revisited from the other side. In other words, from the upside. Here is the euro continuing to push higher on the weaker dollar. We lost 3,000 in open interest on an inside extended trading hour range yesterday on low volume. Yesterday was kind of a decision-making day. Now we're trading above last week's high. Open interest, again, indicated just some loss in positioning. Longer time frame structure remains lower. Are we getting close to changing that? I believe weekly kickoff high here, 1002, basically par is the decider of that. If we can get back above par and accept, I think we may see a decent market state change. Here's the 30-minute chart. Overnight inventory to the long side. We've got a lot of gaps to the upside in these markets today. A lot of overnight inventory. If it continues to get paid, it continues to get paid. If it does not, it may give us an opportunity to look for better trade locations at lower pricing. Those overnight inventories often give us that chance. Kind of a low probability of closing this gap, but we never know. We're kind of central in our dannel here, or channel. Try and stay patient. Look at the 10-year. Okay, market state change. Yields have been coming lower. We found some support down here last week. Now this trend line, which has 1, 2, 3, 4, 5, 6 points of contact, as organized in a straight down and 45-degree angle as this was, we may break that today. There may be a market state change here. I find it hard to believe that yields are going to drop that much to create a big opportunity to the upside. But we added 48,000 in open interest on this push to the upside yesterday. Pretty low volume, though. Pretty low volume. So take a look at the 30. Inside range, inside value. I think to me that the overnight inventory is a little bit to the long side. I'm going to be cautious and really look at the overnight high and overnight low before looking for any opportunities here. Try and stay patient. And to the natural gas, apparently the White House is pulling out of a ban of exports as Europe faces a crisis that may seriously change the face of this market. We're still looking for the continuation and eventual termination of the low here from our head and shoulders. Market seems to be struggling in that regard a little bit. We did add 11,000 downside open interest on higher volume yesterday. The pattern is still intact. We're looking for eventually continuation of this measured move down to weekly kickoff low. So we had some gyration as that news came out about the White House. We've got an inside kind of extended trading hour range here. Somewhat. We just did take that move up towards last week's low. We're in range, we're in value, we're in balance. Try and stay patient. Focus on the extremes for your opportunities. Right, coffee's ready, Jake. Yeah, I've got some coffee here. I'm going to go get some fresh coffee and get ready for Make Hogue Money. I'm looking forward to seeing you all there. You can get into the Zoom meeting. You can watch on YouTube. Remember, there's about a 10-second delay if you're watching on YouTube. So just keep that in mind when you're looking at your charts and we're looking at ours. Let me get started here, and we'll be off and running. Hopefully here by about 8:20, I'll have everything set up and ready to go for us for Make Hogue Money. Let's go. You guys Show me the money. All right. I'll see you in just a couple of minutes. Trade well if I don't see you. If not, we'll see you for Coach's Playbook or the recap at the end of the day. And don't forget to check your emails at 10 o'clock.